Hi there. So, in today's live stream episode for the 1 Minute Retirement Tip podcast, I'm talking about what do I do with my inheritance money. Well, a number of years ago, I had a client who passed away, and she and her husband, who had died several years prior to her death, they had worked really hard their whole life. They had saved, invested that money, made really good decisions with their money, and really they had never had careers where they made a really high income. But even despite that, because of their savings habits, they had managed to amass something like, if I recall, it was like seven or maybe $800,000. And so when the wife died, the money went to their only child. And she decided that she wasn't going to spend it. She was just going to do a little thing here and there. Like she wanted to buy a new house and she wanted to do some other things with that money. She had already earmarked some of that money to spend it. And the problem with this was that at the time she was dating someone, he was unemployed and she was working part-time, making barely above minimum wage. And it just didn't pencil out. So she took a very large lump sum right away, bought a house with it. But of course, if you're a homeowner, it's not just the initial purchase. You also have taxes and insurance, and there's upkeep and maintenance and other costs associated with it. And even though she paid cash for the house, she still couldn't actually afford to live in the house. And then she decided she wanted to do some other things. And very quickly, this inheritance became not a pot of money for the long term and for her own retirement and financial security, but all it did really was fund her a very luxurious lifestyle for about 2 years until the money ran out. And it was very sad to watch because, of course, she has control over her money. We can't keep her from taking withdrawals from the portfolio. But what she ended up doing is she very quickly spent about $700,000. And this happens. This is not an anomaly. I wish it were the exception, but it's actually the rule. This is the norm. So, and there's a lot of statistics to back this up, where when Americans receive an inheritance, we actually end up spending about half of it. Things like vacations or new cars or a remodel or something, we only end up saving about half of it. And then about 20% of us will spend every single penny of our inheritance. And that's just not just small inheritance like $5,000 or $10,000. That study was only looking at what people do with six-figure inheritances or more. And 20% of us will spend every single penny and not save a dime. So in the podcast this week, I basically talked about smart things you could do, really stupid things you can do with your inheritance. But today I want to pose an interesting question that I talked about in one of the episodes of the podcast this week. And what would you do with $1 million? What would I advise my clients to do if they inherited $1 million? And so I have some guidelines for you to think about in order for you to plan for your future inheritance or any windfall that you might receive. These are guidelines that apply to maybe you get a big company bonus or maybe you win the lottery. Chances are that will not happen, but there is a really good chance that you will receive a inheritance, and that could be a sizable inheritance. I think the average inheritance is like $295,000, somewhere in that range. And of course, there are inheritance that are much more than that, and then there are people who will inherit virtually nothing. But most of us are actually going to receive something, so we need to plan for that, and that's what I'm going to break down for you right now. So let's go ahead and get into it. So first of all, what I would highly recommend if you receive $1 million is to, or any sum of money, but I'm just going to use real numbers here to make this applicable, is the first thing you're going to want to do is pay off your debts. If you have high interest credit card debts, maybe you have unpaid medical bills, maybe you have still a lot in student loans or car debts, whatever those are, you're going to want to pay down your debts and get rid of those. This doesn't include your mortgage though. I am a fan of paying off your mortgage. I actually did a video about it, about how you should pay off your mortgage if you can before you retire. But mortgages are usually very large debts. So we don't want to put all of our inheritance money into a illiquid asset that is not growing that much. That's our home. But we do want to pay down, especially higher interest debts like credit cards. Usually student loans and car loans and things like that tend to be a little bit higher in terms of interest rate when you compare those to what you're paying on your mortgage. So that's what you're going to want to do first. So let's say maybe you have $30,000 worth of car loans and unpaid medical bills, and you get your $1 million inheritance. Bam, you wipe that out. Next, you're going to want to earmark some of it for spending. I'm not a big advocate of being like completely austere with what you get, but too many people do the exact opposite. They start just spending money and they justify, oh, it's just a little bit here on this nice vacation, or I've never flown first class before. I really, really would like to do that. And so we increase our lifestyle. And it just seems at first it's a little bit, but then it grows and grows. And before you know it, you're that among the 20% who end up spending everything. So in order to avoid that, we really only want to earmark no more than 10% for spending, gifting, and I would say donating as well. But depending on the size of your inheritance, you may want to donate even more than that. But if we're lumping spending into that, no more than 10% of the inheritance. That way you get to have a little bit of fun and do some things that maybe you've been putting off, like a nice vacation or a remodel for your kitchen or buying a new car that you really need. Whatever that is, you get to have some money that you get to spend on yourself or your family, but no more than 10%. So in $1 million inheritance, that's $100,000. You can do a lot with $100,000. But again, it restrains you from spending $500,000 or $1 million over the course of a couple of years and then seeing the money be completely gone, which we don't want. And then lastly, what you're going to want to do with the rest of that money. So let's say you've spent $30,000 paying down debts. You spent $100,000 on, remodel and vacations and buying a new car, things like that. And now you're done with your spending, because once that 10% is gone, it's gone. So if you decide to donate part of it, it's gone. So we can't dip into it. So what we're going to do with the rest, which now we have $870,000 left. What we're going to do with the rest of that is we're going to save it and invest it for the long term. Most people will get an inheritance somewhere in their 40s, 50s, or 60s. And what's perfect about the timing of that is that a lot of times it can make up for and kind of fill the gap on you being a little bit behind in saving for retirement. So you're not quite where you need to be in your early to mid 50s. And then, if you have parents who pass away, all of a sudden you have this inheritance that can fund your retirement and kind of close that gap with what you did not save for your own retirement. And so if I take the other $870,000 in this scenario, put that into my portfolio, invest that for the long term for retirement. I do that prudently. I don't touch it. If you understand how compound interest works, if you take $870,000, it's not unreasonable that money would double by the time let's say you got it when you're 50. It's not unreasonable to think that money would double if you invested it prudently, wisely, and did not touch it. That money could double by the time you're 60, 10 years later. So 10 years, you don't have $870,000. You have more like, $1.7 million now, if my head math is right. And then if you wait another year, let's say you wait until you're 70 and you don't retire, you don't retire until you're 70, you don't touch it until then. Guess what? All of a sudden you have like $3 million that from the seed of that $870,000 inheritance. So very important, pay down your debts first. Earmark only no more than 10% for spending, gifting, and donating, and then save and invest the rest to shore up your finances and help you achieve financial security for the long term. All right, so that's today's video live stream. If you like this video, please consider subscribing to my channel. I do a new live stream every week that's based on the topic that I'm covering in my podcast, which is the 1 minute retirement tip. If you like quick tips to help you on your path for retirement, I really encourage you to subscribe wherever you listen to podcasts. It is the only short form retirement focused podcast on the Amazon Alexa platform. So if you listen to flash briefings on your Amazon Alexa device, you can subscribe there or wherever you listen to podcasts. So thank you so much for listening. I hope you have a blessed day and please subscribe. Have a great one. Bye-bye.